Hey traders and investors, it's Serge Berger here. What I want to take a look at today is the Russell 2000, and as you know, for those of you that watch these videos on a regular basis, the Russell 2000, in my opinion, is actually a much better way to be able to judge the U.S. economy and vice versa. So you're looking at the Russell 2000, you're likely getting a truer read of the U.S. stock market than you are in the S&P 500, which from a revenue perspective gets a lot more of it internationally. So if you look at the Russell 2000, it's something I've pointed to for quite some time. Just look at the chart. Basically, I think the setup here, or the pattern that it's been tracing out, is very bullish through a multi-month lens. It's very simple. You see that the index is kind of just now pierced back above this resistance line, which basically could look at sort of a neckline of a major inverse sort of bullish pattern. You can see the capitulation here in October. What's more concerning though is the near term. And if we zoom in a little bit, and that's sort of what I want to get at, if you look at the slow moves higher in any index when they're very consistent and there's literally no down days, but you get sort of little moves higher non-stop for 1, 2, 3 weeks, ultimately that usually almost always leads to some sort of retracement of at least a few percent, if not more. So right now, if we look at the Russell 2000, we can kind of draw a parallel, and I try not to look back just a couple months in the analysis, but in this case, it actually, really does replicate kind of the same thing. Look at the slow move higher that we had here at the end of December, and I'm going to zoom in a little bit more even, and you can see that ultimately, that was not sustainable. I talked about that at the time in real time to the Study Trader subscribers. And of course, we acted in kind and kind of started loosening up on the long side and actually started going a little bit short. So right now you're seeing the same thing, right? So if you just, now look at the price action over the past, let's call it 2 weeks or so, very, very concerning how slow, this move higher has been. Very little volatility, but continued rise higher. And that most likely will lead to some sort of a drawdown, in this direction. I'm not sure how much, but the Russell 2000 is a better index to then trade than the S&P 500 because you get more leverage. In other words, the Russell 2000 will probably move more percentage-wise than the S&P. So something like anywhere between 2 and 4 to 5% at the very least, or sort of within that range. Is very probable of taking place here again, because if the psychology of the slow move higher is such that it's sort of on low volatility and it's kind of climbing the wall of worry, if you will. So that's what I'd be looking at here as we close out the month of February today and move into March in Monday's trading session. So it's not uncommon to see a change of trend in the beginning of a new month. And so I'm be looking for a little bit of weakness coming into the Russell 2000 here in the next days, maybe weeks. Hope this makes sense, guys. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is StudyTrader, and I'll see you in the next video.